Investment winter startup survival strategies. In recent years, the global investment market has been experiencing an investment winter. The combination of high interest rates, economic slowdown, and geopolitical instability has significantly dampened the investment sentiment of venture capitalists (VCs) for startups that previously grew rapidly by attracting massive investments with a growth-first strategy. Now is a desperate time for survival. What strategies can startups adopt to survive this investment environment and, moreover, seize the next growth opportunity? 1. Mindset shift from unicorn to camel. In an investment winter, the past blitzscaling strategy, which involved rapidly scaling up even at the cost of losses, must be set aside. Forbes, an American economic magazine, advised that it's time for startups to temporarily put aside their goal of becoming a unicorn, an unlisted company valued at over $1 billion and instead choose a camel strategy. Just as a camel can survive for months without water, capital, startups must build the resilience to survive self-sufficiently without external investment. This means a shift towards management that prioritizes profitability. 2. Thorough cash flow management. Extend your runway. In an investment winter, extending a company's runway, the period it can sustain itself with its current cash reserves, is key to survival. Rigorous management of cash outflow. Every expenditure item must be reviewed from top to bottom, and unnecessary costs must be drastically cut. Whether fixed or variable costs, such as office rent, marketing expenses, or employee benefits, efficiency must be maximized. Restructuring business for profitability. Business models or projects that are not immediately profitable should be temporarily suspended or decisively abandoned. For the short term, efforts must be concentrated on core businesses that can focus on profit generation. Efforts to increase revenue beyond merely cutting costs. Full efforts must be made to increase actual revenue by attracting customers and enhancing services. 3. Focus on core competencies and efficient talent management. In difficult times, it is crucial to concentrate on a company's core competencies and enhance organizational efficiency, selection, and concentration rather than trying to do everything well. Companies must clearly identify what they do best, their core competitiveness, and concentrate resources and personnel there. Lean organization operation. Unnecessary work processes should be eliminated, and an efficient organizational structure should be built to achieve maximum results with minimal personnel. Caution should be exercised in hiring, and ways to increase the productivity of existing personnel should be explored. 4. Strategic investment attraction and relationship management. Even in difficult times for investment, funding does not completely stop. However, it is important to recognize that investors' standards have become much stricter. Emphasis on solid business model and clear revenue structure. Investors now scrutinize startups with proven market viability much more rigorously. It is difficult to attract investment with just an idea. A business model that can demonstrate actual revenue and profitability must be presented. Realistic company valuation rather than clinging to past high valuations. It is important to present a realistic company valuation that aligns with the current market situation. Strengthening relationships with existing investors. If new investment attraction is difficult, discussions for additional investment can be pursued based on trust with existing investors, or alternatives such as bridge rounds can be explored. Consideration of alternative funding sources. Government support programs, policy funds, bank loans, and other diverse funding options should be actively considered. 5. Seizing opportunities amidst crisis. Separating the wheat from the chaff. An investment winter is a difficult period, but it can also be an opportunity for companies to be separated into the wheat and the chaff. Securing competitive advantage when competitors are struggling. Strengthening internal foundations and core competencies can create an opportunity to secure a unique position in the market. Talent acquisition. It can also be an opportunity to acquire excellent talent, leaving other startups that are struggling to attract investment. Business model review. Difficult situations can serve as an opportunity to identify and improve fundamental problems in the business model. An investment winter is a tremendous challenge for startups, but it can also be a crucial turning point to improve a company's constitution and build a stronger, more sustainable business. Only startups that persevere like camels, manage resources wisely, and seize opportunities amidst crisis will be able to usher in the next era of growth.